Most people don't take money for granted, and there's a lot of stuff like working online. It wasn't very popular like 10 years ago, but now at least 1 billion people are working from home. At the start of the new decade, 40% of the strongest currency on the planet, the US dollar, it just got created out of thin air. So the economy was flooded with liquidity. And if you were in the stock market, it would be one of the best years of your life. Many believe that was positive, but unless you had a real job, it was very difficult and it was actually awful. If you possessed a stock portfolio with $1 billion in it, without doing any job, any work, any effort, you would have made 30% in the start of the new decade. And why? Because of maintaining stock investment. And why? Because Jerome Powell printed the money. However, if you had a real job and you had to close your office, in fact, even if you were practicing something like dentistry or being a doctor, you would have to make 30% more just to break even. So as a result, there were two kinds of people. One who said that the economy was booming and the other who was saying that it was collapsing. But then if you think about it, if Wall Street says that everything is going great and they go up on 30%, and Main Street is actually doing very bad, there's something else going on here. So there's more than just the inflation rate, which is promised like 2-3%. All the money is going to the assets. So if your stock portfolio or if your house drives up with 30%, there is some money going in there. And it's more inflation than just the 2-3% a year, which the news tells you. If you look further, the money is actually appreciating 7-10% a year, if you're lucky with that. And if you look at the same time, the S&P 500 is also appreciating 10%, so that correlates with the amount of money. And if you really think about it, if you just keep your money in the bank account and you lose 10% a year, it means that there is something else going on, and all the value of monetary currency is going to the assets. It looks like it's going up, but the money is actually devaluating. So the question is, what can you do when your money becomes worthless? Can you put it in stocks? Can you put it in somewhere else? What can we do about it? So let's say if it was 1900 and you had $100 million and you would put it on any other currency except for the US dollar, you would have lost all of it, because I think only the pound, maybe the US dollar survived. All the other currencies are just gone. And even if you had the winning currency, the US dollar, you would have still lost 99% of that value. So what can you do with 100 million? What if you put it in land or properties? Well, every country has its policies, so the land that you have, you might not even own it. You might have ownership of that land for a few decades, but unless you're sovereign and you have real influence in politics, you won't keep that. And plus, even if you are sovereign and you have rented out to someone else, you still have to deal with the tax. You still have to deal with the people who are renting, and you still have to deal with your offspring who are or may not taking care of your properties. So now you want to store your money, your wealth into time. It's very difficult to do that through currencies, which is basically losing their value. It's very difficult to do that through properties, because you don't know if you keep your land or your property or your real estate. The next thing is gold. And the problem with gold, after so many thousands of years, is that these days you have to put it in a vault. And if you put it in a vault, the bank may or may not give you their money back. We had it in the past where countries actually forbid holding your money, like the US, so they can detach paper money from gold. We also have Goldman Sachs, who manipulated so much of gold into paper, so you don't even know what the value of gold is anymore. And even if you keep the gold, in 100 years you might lose a lot of your value, because it's been so artificially inflated in price. And the other problem is you cannot just move gold to somewhere else. You cannot split it. You cannot use it as a payment. It's very difficult to use gold as a currency these days. And if you want to transfer it from one place to another, it's going to cost you so much through bank transfer and through traditional transferring. So now we have gold, which is very difficult to move through space and time. We have currencies which are basically worthless, and we have properties which is very difficult to maintain. Unless you have a system like Hawala, which is forbidden in most countries, it's still very difficult to move gold from one place to another. And even then, during acts of war, gold can be used as a booty. And if you think like it as an engineer, the only intrinsic value of gold besides jewelry is that it can be used as a conductor, and mercury on an even lower temperature can be better used as a conductor. And then you have other payment systems or systems of storage, which has been done in the Islamic world, which is gold, silver, wheat, barley, and salt, dates. The problem with this is, besides being objective to booty, you can also not really move it through space and time. If you look at money from the perspective of an electrical engineer, you can see that just like electricity, which needs a medium to transfer from one place to another, money is basically socio-economic energy which can transfer to the medium called currency. And since we have transferred a lot of medium like books and music and movies and video, like the video that you're watching to me, through a medium with digital capacities, the next step would be to transfer energy and socio-economic energy in the form of money through technology. So now we have gold, which is very expensive to travel from one place to another. We have currencies which are getting worthless. So money has been the last 30 years basically the S&P. So when the stock market rises 10%, you can be sure that inflation, the real inflation, is also 10%. And the problem with the stock market is that it's not scarce. If a company is overvalued, it can actually equity shares. The company can go bankrupt, CEO can go nuts, the management team can do some stuff, and you need to pay a fee every year for like 2%, which is basically your money bleeding to death. So if you look at this option and you look at it through a lens of all kinds of possibilities, the best thing would be to have properties in London, in Seoul, in New York, have it in a way that you can actually get it out of the country and to another country. And it could be in a digital form. And that is basically what Bitcoin is. Bitcoin is digital property. It has no maintenance cost. It is scarce. It will be 21 million, nothing more, nothing less. And you could basically transfer it instant to cyberspace with the speed of sound, even faster with the speed of light. It can be broken into pieces, unlike gold, and it can be done millions of times a day. And that's the beauty of Bitcoin. And this is the reason why Bitcoin is the future of wealth and also the future of currencies. And if you want to learn more of it, and it's going to be a lot more to learn, you can click on a video here.